comment says the overall market sentiment page on Power Options could be a useful review again this week. Okay, fantastic. Market sentiment tool is one of our pods here, data pods here that we have on Power Options. It is a aggregate of 13 broad-based market indicators that we've keep the data on historically, many years back in time. And Ernie did extensive analysis on these 13 broad-based indicators. Put-call volume ratio across the entire market. Number of days the SPX has been up. Gaps over the 20-day moving average. The percentage of stocks above their SMA 20. Stocks hitting new 52-week highs or lows. VIX, the TRIN, RSI, Relative Strength Index of SPX, and more. Now, Ernie went through other vast amount of indicators. I think a total of 87 to 89 different indicators to see which ones successfully pointed to a precursor for a market movement, either up or down. Bullish, strong bull, bearish sell, sell warning, and more. And what he did through this testing, of course, he's found which ones did seem to point to it, and when in conjunction with together, which ones did point to it successfully and which ones didn't. And looking at the history, we're able to go back and put in a histogram, sort of allows us to set fences of when we're going to see an expected bullish move or bearish move for each of these 13 indicators. In other words, when the put-call volume ratio gets to this point, it barely ever continues down. That usually means it's going to go back this way. And for it to go back that way, we'd probably expect to see a bullish movement. When we're here, a bearish movement. When we're here, when we get up to these ranges, we don't expect to see it historically continue to go up in that direction. So we're able to set fences and say, hey, when it's up here, that usually means it's going to revert back to here. And in order for it to revert back to there, we are going to have to see a slightly bullish move. And we'd see this would go green. This indicator would go green. Right now it's neutral. Okay, so when it slides down one way or slides the other way, that's when you see it go bull or bear. Now, because of the easing of the market on Monday, and again, of course, today, the decline in the market, easing of the market, we've gone back to neutral. But prior to that, we started to see the sell warnings trigger on January 2nd. It was even before that, wasn't it, Mark? I think it was December 27th. Let's take a look. So I'm going to go back to January. Yep, that's where it was, 20th, 26th, and 27th. That's when the sell warnings started to come in. Now, yeah, SPY continued to move up. We started to see sell warnings. Sorry, let me go back here. But then when we started to get into this area, 2 weeks ago, 15 days ago, on the 16th and 17th, that's when we started having these discussions. That's when I bought my VIX calls. That's when, I'm sorry, I said December earlier on the graph when we were talking about the VIX calls. It was at this time. It was around the 14th and the 15th that I bought the VIX calls when the VIX was down around 1250. I apologize. But in any case, that's when we started to hedge. That's when we started advocating using the insurance tool and Power Options to buy puts on the stocks that you had up in price, using some VIX calls, maybe puts on SPY. That's the discussions we were having. And, you know, of course, it still was meandering about for a little bit. You know, it was triggered here at 33.29. It pulled back a little bit the next day. Still back up here, 32.95. Still a little bit down, 30, and then we had that move, 32.43. Right? That was the big move, the 50-point move. That was on the Monday. And it eased off and it went back to neutral. Now, I'm not saying now is the time to do iron condors, now that we're back to this neutral position. I'm not saying now is the time to do neutral position, especially not iron butterflies, because the last strong signal was still a sell warning. Okay? Until, so we did have the trend. The trend did move to bullish. Okay? But we still have one position here still at bearish. The number of days the SPX has been over the 100-day, that's still bearish. When I see this ease off and we start to see one or two more indicators go bullish and we go back to a bullish indicator, that's when I'd say that maybe the fear of the negative is gone. But again, this is something interesting. This is an interesting discussion, and it's an interesting sentiment look. Why do I mean that? Is because we did see the bearish sell here based on the indicators of, yes, we saw some of those, the SPX, the value of the VIX, the trend, those were going into bearish signs, bearish warning signs. We did have a bearish move on Monday, but it wasn't really related to the market as a whole, was it? It was sort of related to fears, the coronavirus, a little bit more. And then today, I looked for other indicators that would lead to this. There were some poor earnings. There was a poor outlook, I should say, by Caterpillar. But at the same time, you've got Tesla running up. Who is it else? Facebook and IBM, I think, and there's one other big one I can't remember. All had positive earnings with positive outlook coming out today. I don't know if the easing that we've seen today and the easing that we saw on Monday the 27th was related to the sell triggers, was related to the economic factors pointing to the sell triggers, or if it was just related to the outside global contagion fear. And that's interesting. So I don't know if we're out of the woods yet is what I'm saying, even though the market indicator has gone back to neutral, because the last indicator was still a strong bearish sell. Not strong bearish sell yet. There is a strong bearish sell and another warning after that. But we had the sell warning and a bearish sell, then we'd see a strong bearish sell. And even though we're back to neutral now because we've had some easing, I'm not 100% confident that we're out of the sell warning fog, for lack of a better term, Mark. Okay? So that's where I stand with it right now. I am likely going to open bull put spreads Monday or Tuesday of next week as I normally do, because we saw that those two spreads that I had opened 10 days ago had expired worthless. We're going to take a look at what the market's doing on Monday. I'm probably going to make my decision in Monday afternoon or maybe Tuesday morning after we see what the market does on Monday and at the open on Tuesday. That'll help me determine if I'm going to use that portion of my portfolio to open another 2 or 3 bull put credit spreads. But again, looking at where we are now, I'm not saying everything is rosy and I'm not saying everything is green. We are at neutral, but again, the last signal that we had was the sell warning. So I want to see a little bit more into the bullish. We've got, we do have 2. Where's my second one? Oh, the MACD gap has turned bullish. So the gap on the SPX MACD, the negative gap, is in a range where it doesn't usually continue to move down. So we're here. And the fence is it's a negative 1.5, and the last market low of 16, it was at negative 0.5. So the MACD gap was pretty big today. It may continue to move down, but you see very infrequently does it continue to move down above this level. Usually the market tries to have a correction and pushes it back to this way. And what would cause that? Well, the MACD gap would have to decrease, meaning it's moving back up or possibly even going to a positive crossover at that time. Okay. One other thing I wanted to mention, of course, I haven't mentioned this in the past. I think we looked at it once or twice, Mark, when I reviewed it, but another feature here that you have, in addition to the histogram plot over time of the distribution of the number of times that this particular indicator hits these levels, is you can compare it versus SPX. Okay, so this is the total yearly data that we have going back to 2012 for these indicators. I can look at all. Oh, it's not going to like it. It might give me an issue simply because why? Because anytime we talk about history, anytime that these tools have to interact with the history, it's got to go into the historical database. And of course, we know we're uploading all of our historical data from the close of business day right at this time. Okay, but what are we looking at here? We're looking at the SPX MACD gap, that's the blue line, versus the price of SPX. And you see we're down here at the low, extreme lows, minus 23, minus 22, that's when the SPX really went down. That was in 2018. What is that? I'm pretty sure this is the February decline, February 5th through 9th of 2018. Blue is the large MACD gap, and this is the level of SPX. And you see that falling down there. I'm looking at the right time frame. 1221. Oh no, I'm sorry. This here, this decline. I know it's hard to see. Give me a second. This decline here, this is talking about that October to December decline of 2018. This is the February 5th. No, that's back in. Yeah, this is the February 5th through 9th decline here with that huge volatility spike that we had. That was the large MACD gap. So you can see it historically. You can go year by year, or we can go just over the whole course. Let's go to 2018, clear up my drawings. Yeah, see, there you go. That's a little bit better indicator of the time frames. And I think these are the ones that have been updated as well. I'm not positive. I think these are updated to that new charting style that's non-flash anymore, so you can go through these. So that's the second one that was done as well. I believe that's been updated. Okay. Oh, no, I'm not in the right plot. I'm sorry. There we go. So yeah, there's the February 5th through 9th decline there with the huge MACD gap and the decline in SPX. And then going forward through 2018, there's the October to December decline with a bottom of October 27th, and that gap was at minus 28. So you can see the values historically, Mark. I don't think I've showcased that for all of those as well.